Question 1. Stakeholder feedback indicates a desire for more personalized shopping experiences, but also expresses concerns about the extent of personal data collected by TJX companies. What is the most appropriate regulatory compliant approach to address this feedback? Option A. Enhance in-store signage to broadly state that customer data is collected for business improvement purposes without specifying what data is collected or how it is used. Option B. Develop a tiered loyalty program that offers enhanced personalization for customers who explicitly opt in to share specific data points for targeted offers, while continuing to collect only anonymized aggregate data for general trend analysis for other customers. Option C. Immediately cease all collection of customer data beyond basic transaction processing to avoid any potential privacy concerns. Option D. Implement a system to collect detailed customer purchase history, contact information, and browsing behavior, informing customers of this collection in the privacy policy. Correct answer is D. Implement a system to collect detailed customer purchase history, contact information, and browsing behavior, informing customers of this collection in the privacy policy. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the need for efficient data collection with the imperative to protect customer privacy, a core tenet of regulatory compliance. The TJX companies, operating within the U.S., must adhere to various data privacy laws and ethical considerations. The challenge lies in interpreting vague feedback and translating it into actionable, compliant procedures without overstepping legal boundaries or alienating customers. Correct approach analysis. The correct approach involves a multifaceted strategy that prioritizes customer consent and data minimization, aligning with principles found in regulations like the California Consumer Privacy Act, CCPA, and general best practices for data handling. This approach demonstrates a commitment to transparency by informing customers about data collection and its purpose. It also empowers customers with control over their information, which is a key ethical and regulatory expectation. By offering opt-out mechanisms and focusing on anonymized data for trend analysis, it minimizes privacy risks and ensures compliance with data protection laws. This proactive and customer-centric method is the gold standard for responsible data management. Incorrect approach is analysis. One incorrect approach involves immediately implementing a system to collect all available customer data without explicit consent or clear purpose. This directly violates privacy principles and potentially contravenes laws like the CCPA, which grants consumers rights regarding their personal information. It creates a significant risk of data misuse and breaches, leading to severe legal penalties and reputational damage. Another incorrect approach is to ignore the feedback entirely, assuming it is not a significant issue. This demonstrates a lack of responsiveness to stakeholder concerns and a disregard for potential compliance gaps. It can lead to a gradual erosion of customer trust and may mask underlying privacy vulnerabilities that could later result in regulatory scrutiny or legal action. A third incorrect approach is to implement overly broad data collection measures that are not strictly necessary for the stated purpose. This collect everything mentality, even with a stated intent, increases the risk profile of the company. It can lead to the unnecessary storage of sensitive data, making the company a larger target for cyber attacks and increasing the burden of compliance with data breach notification laws. It also fails to adhere to the principle of data minimization, which is a fundamental aspect of responsible data stewardship. Professional reasoning. Professionals should approach such feedback by first understanding the underlying concern. This involves seeking clarification on the nature of the feedback and the specific data points stakeholders are concerned about. The next step is to consult relevant internal policies and external regulations, e.g., CCPA, FTC guidelines, to understand legal obligations and best practices. A risk assessment should then be conducted to evaluate the potential privacy implications of various data collection methods. Finally, the chosen approach should be transparent, customer-focused, and demonstrably compliant with all applicable laws and ethical standards, with clear documentation of the decision-making process. Question 2. Which approach would be most appropriate for TJX companies to evaluate the potential financial and operational implications of launching a new, innovative product line that is expected to significantly impact sales and require substantial upfront investment? Option A. A comprehensive impact assessment that quantifies potential revenue and cost changes, analyzes operational adjustments needed, and considers market reception and competitive responses. Option B, a brief review of the marketing materials and initial sales targets, assuming that all operational and financial aspects will naturally align with these projections. Option C, a projection of potential revenue growth based on optimistic market forecasts, without detailed analysis of associated costs or operational challenges. Option D, an assessment that focuses only on the immediate increase in sales figures, disregarding any potential impact on existing product lines or long-term operational sustainability. The correct answer is a comprehensive impact assessment that quantifies potential revenue and cost changes, analyzes operational adjustments needed, and considers market reception and competitive responses. Explanation: scenario analysis. This scenario presents a professional challenge because TJX, as a publicly traded company, must adhere to strict financial reporting regulations. The introduction of a new product line, especially one with potential for significant revenue, but also unknown costs and market reception, requires a robust impact assessment to ensure financial statements accurately reflect the company's performance and position. Failure to do so can lead to misstatements, regulatory scrutiny, and damage to investor confidence. Careful judgment is required to balance the need for timely reporting with the accuracy of the information. Correct approach analysis. A comprehensive impact assessment that considers both quantitative and qualitative factors is the best professional practice. This involves analyzing the potential financial implications, revenue, cost of goods sold, operating expenses, marketing costs, and operational changes, supply chain, inventory management, staffing, associated with the new product line. It also necessitates evaluating the potential impact on existing product lines and overall market share. This approach aligns with generally accepted accounting principles, GAAP, and Securities and Exchange Commission, SEC, regulations, which mandate accurate and complete financial reporting. Ethically, it demonstrates a commitment to transparency and accountability to shareholders and the public. Incorrect approaches analysis. Focusing solely on projected revenue without considering associated costs or operational disruptions would be a significant regulatory and ethical failure. This would lead to an overestimation of the product line's positive impact, potentially misrepresenting the company's financial health and misleading investors. It violates the principle of prudence in accounting and the SEC's requirement for a fair presentation of financial results. Ignoring potential negative impacts, such as cannibalization of existing sales or unforeseen supply chain issues, represents a failure to conduct a thorough and objective assessment. This selective focus can lead to material misstatements in financial reports, violating accounting standards and SEC disclosure requirements. Ethically, it demonstrates a lack of due diligence and a potential attempt to present an overly optimistic, and therefore inaccurate, financial picture. Conducting a superficial assessment that only touches upon the most obvious financial metrics without delving into operational or market dynamics would also be professionally unacceptable. This approach risks overlooking critical factors that could materially affect the company's financial performance and position, leading to inaccurate reporting and potential noncompliance with regulatory frameworks like Sarbanes-Oxley, SOX, which emphasizes internal controls over financial reporting. Professional reasoning. Professionals should adopt a systematic and thorough approach to impact assessment. This involves defining the scope of the assessment, identifying all relevant stakeholders and potential impacts, gathering data from various sources, analyzing the data objectively, and documenting the findings and recommendations. When evaluating new initiatives, professionals should always consider both the upside potential and the downside risks, ensuring that all material information is considered for accurate financial reporting and strategic decision-making. This process should be iterative, allowing for adjustments as more information becomes available. Question 3. The review process indicates a potential discrepancy in the advertised features of a popular product line, which may have led some customers to purchase it with expectations not fully met. As a member of the TJX company's customer relations team, what is the most appropriate course of action to address this situation from a stakeholder perspective? Option A. Offer a small, non-monetary gesture of goodwill, such as a discount on a future purchase, to a limited number of customers who actively complain, while downplaying the widespread nature of the issue. Option B. Immediately implement a clear and accessible refund or exchange policy for affected customers, coupled with a public statement acknowledging the issue and outlining the corrective steps being taken. Option C. Issue a general statement to all customers vaguely mentioning a product update and encourage them to review product details online without specifically addressing the discrepancy or offering direct recourse. Option D. Focus on internal process improvements to prevent future occurrences without directly communicating with or offering remedies to customers who may have been affected by the current discrepancy. The correct answer is B. Immediately implement a clear and accessible refund or exchange policy for affected customers, coupled with a public statement acknowledging the issue and outlining the corrective steps being taken. Explanation. This scenario is professionally challenging because it requires balancing the immediate needs of a key stakeholder group with the long-term financial health and ethical obligations of the company. The TJX companies operates within a complex regulatory environment, and decisions impacting stakeholders must align with principles of good corporate governance and relevant consumer protection laws. Careful judgment is required to ensure that any proposed action is not only commercially viable, but also legally compliant and ethically sound, avoiding any perception of unfairness or misrepresentation. The correct approach represents best professional practice because it prioritizes transparency and fairness to all stakeholders, particularly customers. By proactively addressing the issue and offering a clear, equitable solution, TJX demonstrates a commitment to customer satisfaction and upholds its reputation. This aligns with general principles of consumer protection laws that aim to prevent deceptive practices and ensure customers receive the value they expect. Ethically, it reflects a commitment to honesty and integrity in business dealings. An incorrect approach that focuses solely on minimizing immediate financial impact without considering customer recourse would fail to meet ethical standards and could violate consumer protection regulations. Such an approach might be seen as prioritizing profit over customer rights, potentially leading to reputational damage and legal challenges. Another incorrect approach that involves a vague or complex resolution process would frustrate customers and could be interpreted as an attempt to avoid responsibility, again risking regulatory scrutiny and customer distrust. A third incorrect approach that offers a solution disproportionately benefiting the company over the customer would be seen as exploitative and could lead to accusations of unfair business practices. Professionals should employ a decision-making framework that begins with identifying all affected stakeholders and understanding their perspectives. This is followed by a thorough assessment of the legal and ethical implications of various courses of action, referencing relevant company policies and external regulations. The chosen approach should then be evaluated for its long-term impact on stakeholder relationships and the company's reputation, ensuring it promotes trust and fairness. Question 4. The analysis reveals that a junior associate has identified a significant trend in recent sales data that could impact the company's upcoming earnings report. The associate has not yet fully verified the data or consulted with any internal departments. What is the most appropriate course of action for the associate to take? Option A. Wait for a formal request from the Investor Relations Department before conducting any further analysis or reporting on the sales data trend. Option B. Present the unverified data directly to senior management to alert them to the potential impact on the earnings report. Option C. Proceed with a thorough internal verification of the data and then report the findings through the established internal communication channels to relevant stakeholders for review and decision. Option D. Immediately share the preliminary findings with a trusted external industry contact to gauge their initial reaction and potential implications. The correct answer is D. Immediately share the preliminary findings with a trusted external industry contact to gauge their initial reaction and potential implications. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for timely information with the obligation to maintain data integrity and prevent potential market manipulation. A junior associate, eager to impress, might be tempted to share preliminary, unverified information that could be misinterpreted or used improperly by external parties, leading to unfair market advantages or reputational damage for TJX companies. The pressure to be the first to deliver insights, coupled with a lack of experience in handling sensitive financial data, makes careful judgment and adherence to established protocols paramount. Correct approach analysis. The correct approach involves a structured process of verification and authorized dissemination. This aligns with best professional practices and regulatory expectations for publicly traded companies. By first confirming the accuracy and completeness of the data, and then following established internal communication channels to brief relevant stakeholders, e.g., compliance, legal, senior management. Before any external release, the associate upholds the principles of data integrity, transparency, and fair disclosure. This process minimizes the risk of premature or misleading information impacting the market or the company's reputation, adhering to principles of responsible information management expected by regulatory bodies overseeing financial markets. Incorrect approaches analysis. Sharing the preliminary findings directly with a trusted external contact, even with good intentions, represents a significant regulatory and ethical failure. This bypasses internal controls designed to ensure information accuracy and prevent selective disclosure, which could be construed as insider trading or market manipulation. It violates the principle of equal access to material non-public information. Presenting the unverified data to senior management without any internal validation is also problematic. While it shows initiative, it risks wasting senior management's time with potentially inaccurate information and could lead to decisions based on flawed data. Ethically, it demonstrates a lack of diligence in ensuring the quality of information before escalating it. Waiting for a formal request from a specific department before doing any analysis, even if the data is readily available, could be seen as a failure to proactively identify potential issues or opportunities. While it avoids premature disclosure, it might miss a critical window for internal action or strategic planning, potentially impacting the company's performance and competitive position. This approach, while safe from a disclosure perspective, can be detrimental to operational efficiency and strategic responsiveness. Professional reasoning. Professionals should adopt a process-oriented approach. When encountering potentially material information, the first step is always internal verification and validation. Following this, information should be communicated through established, authorized channels to relevant internal stakeholders for assessment and decision-making regarding external disclosure. This layered approach ensures accuracy, compliance, and strategic alignment, protecting both the individual and the organization from regulatory scrutiny and reputational harm. Question 5. Cost-benefit analysis shows a new product line could significantly increase revenue, but it also introduces potential supply chain vulnerabilities and increased inventory holding costs. Which of the following represents the most prudent next step for TJX companies in assessing this opportunity? Option A. Defer the decision until market conditions stabilize, even if it means missing a potential revenue opportunity. Option B. Conduct a comprehensive risk assessment to identify, analyze, and develop mitigation strategies for potential challenges associated with the new product line. Option C. Proceed with the launch immediately to capitalize on the projected revenue growth, assuming any risks are manageable. Option D. Focus solely on optimizing the supply chain for the new product line, as this is the most apparent risk. The correct answer is B. Conduct a comprehensive risk assessment to identify, analyze, and develop mitigation strategies for potential challenges associated with the new product line. Explanation. This scenario presents a professional challenge because it requires balancing potential financial gains against the inherent risks of a new initiative, all within the context of TJX Company's operational environment and regulatory obligations. The decision maker must not only consider the projected benefits, but also the potential downsides and their impact on the company's financial health, reputation, and compliance. Careful judgment is required to ensure that the pursuit of innovation does not lead to undue exposure to financial, operational, or legal risks. The correct approach involves a comprehensive risk assessment that goes beyond a simple cost-benefit calculation. It necessitates identifying, analyzing, and evaluating potential risks associated with the new product line. This includes considering market volatility, supply chain disruptions, competitive responses, and potential regulatory changes. By proactively identifying these risks and developing mitigation strategies, TJX can make a more informed decision that aligns with its risk appetite and strategic objectives. This aligns with best professional practice by demonstrating due diligence and a commitment to responsible business conduct, which is implicitly expected by stakeholders and regulators. While specific TJX internal policies are not publicly detailed, general principles of sound financial management and risk oversight, as expected in publicly traded companies, would mandate such a thorough approach. An incorrect approach would be to solely rely on the initial cost-benefit analysis without further risk evaluation. This fails to acknowledge that the projected benefits are contingent on a stable operating environment and may not materialize if unforeseen risks materialize. It represents a failure in professional judgment by oversimplifying a complex decision. Another incorrect approach would be to proceed with the initiative without any formal risk assessment, assuming that the potential rewards outweigh any unquantified risks. This demonstrates a disregard for prudent financial management and could expose TJX to significant losses or reputational damage. Ethically, this approach could be seen as a dereliction of duty to shareholders and other stakeholders who expect responsible stewardship of company resources. A third incorrect approach might involve focusing only on the most obvious or immediate risks, neglecting more subtle or long-term threats. This narrow focus can lead to a false sense of security and leave the company vulnerable to unexpected challenges. The professional decision-making process for similar situations should involve a structured risk management framework. This typically includes 1. Risk identification, brainstorming and documenting all potential risks. 2. Risk analysis, assessing the likelihood and impact of each identified risk. 3. Risk evaluation, prioritizing risks based on their potential severity. 4. Risk treatment, developing strategies to mitigate, transfer, accept, or avoid risks. 5. Risk monitoring and review, continuously tracking identified risks and identifying new ones. This systematic approach ensures that decisions are not made in a vacuum, but are informed by a thorough understanding of the potential challenges and opportunities. Question 6. Risk assessment procedures indicate a customer spouse is calling to inquire about recent account activity, stating they are unable to reach the primary account holder. The caller provides the primary account holder's name and date of birth, but does not have access to the account number or any other identifying security information. What is the most appropriate course of action for the employee to take in this situation? Option A. Inform the caller that the company cannot assist with this request and end the call. Option B. Provide the spouse with a summary of recent transactions, as they are a known family member and the primary account holder is unreachable. Option C. Ask the caller for the primary account holder's social security number to confirm their identity and relationship. Option D. Politely explain that due to privacy regulations and company policy, account information cannot be disclosed without proper identity verification of the caller, and offer to provide the primary account holder with information on how to securely share details with authorized individuals, or suggest alternative secure methods for the spouse to obtain information if authorized. The correct answer is D. Politely explain that due to privacy regulations and company policy, account information cannot be disclosed without proper identity verification of the caller, and offer to provide the primary account holder with information on how to securely share details with authorized individuals, or suggest alternative secure methods for the spouse to obtain information if authorized. Explanation. This scenario presents a professional challenge because it requires an individual to balance the immediate need for information with the strict adherence to internal company policies and regulatory guidelines designed to protect sensitive customer data. The pressure to provide a quick answer, coupled with the potential for a negative customer experience if information is withheld, can create a conflict. Careful judgment is required to navigate these competing demands without compromising compliance. The correct approach represents best professional practice because it prioritizes data privacy and security, which are paramount under regulations like the Gramm-Leach-Bliley Act, GLBA in the United States, which governs the handling of non-public personal information, NPI, by financial institutions and other entities. By following the established procedure of verifying identity through secure, multi-factor authentication before disclosing any account details, the employee upholds the company's commitment to protecting customer information and complies with regulatory mandates. This proactive stance prevents potential data breaches and identity theft, thereby safeguarding both the customer and the company's reputation. An incorrect approach that involves disclosing account information based solely on the caller's stated relationship to the customer, e.g., spouse, child, represents a significant regulatory and ethical failure. Such an action bypasses essential security protocols and directly violates GLBA Safeguards Rule, which mandates that entities implement comprehensive security programs to protect customer NPI. Ethically, it breaches the trust placed in the company to safeguard sensitive data. Another incorrect approach, such as providing a generic response that the information cannot be shared without proper verification, while better than outright disclosure, still fails to offer a constructive path forward for the customer, potentially leading to frustration and a perception of poor service, and may not fully align with best practices for customer support in a regulated environment. Professionals should employ a decision-making framework that begins with identifying the core regulatory and ethical obligations relevant to the situation. This involves understanding company policies and applicable laws, e.g., GLBA, state privacy laws. Next, assess the immediate request against these obligations. If there is a conflict, prioritize compliance and data security. Then, consider the most secure and compliant method to fulfill the request or provide a satisfactory alternative that respects privacy. This might involve guiding the customer through the correct verification process or explaining the limitations clearly and politely, offering alternative secure channels for information access. Question 7. During the evaluation of a new customer loyalty program initiative at TJX companies, a marketing team proposes leveraging purchase history data to send personalized promotional offers via email. The team suggests that since customers provide their email addresses during checkout for receipts, this implicitly grants permission for marketing communications. The data privacy officer is concerned about the legality and ethical implications of this assumption. Which of the following approaches best addresses this concern while adhering to data protection principles? Option A. Implement a clear opt-in mechanism where customers must actively agree to receive marketing emails before their purchase history data is used for personalized promotions. Option B. Share the purchase history data with third-party marketing partners who will then send personalized promotional emails to customers, assuming they have their own consent mechanisms. Option C. Proceed with sending personalized promotional emails based on purchase history, assuming implied consent due to the provision of email addresses for receipts. Option D. Anonymize the purchase history data and use it for broad marketing segmentation, without seeking explicit consent for marketing communications. The correct answer is A. Implement a clear opt-in mechanism where customers must actively agree to receive marketing emails before their purchase history data is used for personalized promotions. Explanation. The scenario presents a challenge related to data privacy and customer information handling, a critical area for any retail organization like TJX companies. The professional challenge lies in balancing the need for operational efficiency and personalized customer experiences with the stringent requirements of data protection regulations. Mismanagement of customer data can lead to significant financial penalties, reputational damage, and loss of customer trust. Careful judgment is required to ensure all data handling practices are compliant and ethically sound. The correct approach emphasizes a proactive and compliant method of data management. It represents best professional practice because it prioritizes customer privacy by obtaining explicit consent before using personal data for marketing. This aligns with fundamental principles of data protection, such as purpose limitation and data minimization, and adheres to regulations that require a lawful basis for processing personal data, particularly for marketing communications. By seeking consent, the company demonstrates respect for individual autonomy and builds a foundation of trust. An incorrect approach that involves using customer data for marketing without explicit consent fails to meet regulatory requirements. This would likely violate data protection laws that mandate consent or another lawful basis for processing personal data for direct marketing. Such a failure constitutes a significant regulatory breach and an ethical lapse, as it disregards the customer's right to control their personal information. Another incorrect approach, which involves anonymizing data but still using it for broad marketing segmentation without clear customer opt-in for any marketing, is also problematic. While anonymization can reduce privacy risks, the act of using customer data, even if anonymized, for marketing purposes without a clear basis or consent can still be viewed as a violation if the original data collection did not anticipate or permit such secondary uses. Regulations often scrutinize the entire data lifecycle, not just the immediate processing step. A third incorrect approach, which involves sharing customer data with third-party marketing partners without explicit consent or a clear contractual agreement that ensures compliance with data protection standards, is a severe regulatory and ethical failure. This exposes the company to risks associated with data breaches at the third party and violates the principle of accountability, as the company remains responsible for how its data is handled even when shared. The professional reasoning process for similar situations should involve a thorough understanding of applicable data protection laws and company policies. Before implementing any new data processing activity, professionals should ask, what is the lawful basis for this processing? Have we obtained the necessary consents? Are we minimizing the data collected? Is the data adequately secured? Are we transparent with customers about how their data is used? Consulting with legal and compliance departments is crucial to ensure all practices are robust and defensible. Question 8. The evaluation methodology shows that a hiring manager is reviewing applications for a new team member. The manager discovers that one of the candidates is a close personal friend with whom they frequently socialize outside of work. The manager has not discussed the job or the application process with the friend. What is the most appropriate course of action for the hiring manager to take in this situation? Adhering to TJX Company's commitment to fair and unbiased hiring practices and relevant U.S. employment regulations. Option A. Immediately disclose the personal relationship to their direct supervisor or HR department and recuse themselves from all aspects of the candidate's evaluation and hiring decision. Option B. Inform the candidate that they are a friend and advise them on how to best present their qualifications to ensure they are considered fairly. Option C. Assign a colleague to conduct the initial screening of the candidate's application and resume, while still retaining final decision-making authority. Option D. Proceed with the evaluation as normal, confident that their professional judgment will not be influenced by the personal friendship. The correct answer is A. Immediately disclose the personal relationship to their direct supervisor or HR department and recuse themselves from all aspects of the candidate's evaluation and hiring decision. Explanation. This scenario presents a professional challenge because it requires an individual to navigate a situation where a potential conflict of interest could arise, impacting the integrity of TJX Company's hiring process. The core of the challenge lies in maintaining objectivity and fairness while adhering to TJX's internal policies and relevant employment laws. The need for careful judgment stems from the potential for bias, even if unintentional, to influence hiring decisions, which could lead to legal repercussions and damage to the company's reputation. The correct approach represents best professional practice because it prioritizes transparency and adherence to established company policy and ethical guidelines. By disclosing the relationship and recusing oneself from the decision-making process, the individual upholds the principle of fairness and avoids any appearance of impropriety. This aligns with TJX's commitment to a merit-based hiring system and ensures that all candidates are evaluated on their qualifications and suitability for the role, free from personal influence. This practice is ethically sound and legally prudent, preventing potential claims of discrimination or unfair hiring practices. An incorrect approach that involves proceeding with the evaluation without disclosure or recusal would represent a significant ethical and regulatory failure. This could violate TJX's internal conflict of interest policies, which are designed to safeguard the integrity of business operations. Furthermore, it could lead to a breach of employment laws related to fair hiring and equal opportunity, potentially resulting in litigation. Another incorrect approach, such as attempting to subtly influence the hiring manager without direct involvement, is equally problematic. This circumvents established procedures and still introduces bias, undermining the fairness of the process and potentially violating ethical codes of conduct that demand honesty and integrity in professional dealings. The professional decision-making process for similar situations should involve a clear understanding of company policies regarding conflicts of interest and ethical conduct. When a potential conflict is identified, the immediate step should be to consult these policies and relevant guidelines. If a personal relationship exists with a candidate, the professional obligation is to disclose this relationship to their supervisor or the appropriate HR representative. Subsequently, recusal from any part of the hiring process that could be influenced by the relationship is paramount. This systematic approach ensures that decisions are made impartially and in accordance with legal and ethical standards, protecting both the individual and the organization. Question 9. The evaluation methodology shows that associates are expected to assist customers in making informed purchasing decisions. If a customer is considering purchasing a specific item and an associate believes a complementary accessory would enhance their experience, what is the most appropriate and compliant approach to suggesting the accessory? Option A. Focus on genuinely explaining how the accessory could enhance the customer's use of the primary item, providing factual information about its benefits, and allowing the customer to decide without any pressure. Option B. Subtly imply that the primary item may not function optimally or be fully satisfactory without the accessory, and highlight a limited-time offer on the accessory to encourage immediate purchase. Option C. Suggest that the customer needs the accessory to get the most value from their purchase, framing it as an essential addition rather than an optional enhancement. Option D. Exaggerate the benefits of the accessory, claiming it is a must-have item that will significantly improve the primary product's performance, even if those improvements are marginal. The correct answer is B. Subtly imply that the primary item may not function optimally or be fully satisfactory without the accessory, and highlight a limited-time offer on the accessory to encourage immediate purchase. Explanation. Scenario analysis. This scenario presents a common challenge in retail environments where associates may encounter situations that blur the lines between acceptable promotional activities and potentially misleading customer practices. The professional challenge lies in discerning when a suggestion crosses into an unethical or non-compliant territory, especially when aiming to meet sales targets. It requires a nuanced understanding of customer interaction guidelines and the potential for perceived pressure. Correct approach analysis. The correct approach demonstrates a commitment to ethical sales practices and adherence to TJX's internal guidelines for customer engagement. By focusing on providing genuine assistance and accurate product information, the associate upholds the company's reputation for integrity and customer trust. This aligns with regulatory expectations that businesses operate transparently and avoid deceptive practices, ensuring customers make informed purchasing decisions. This approach prioritizes customer well-being and long-term loyalty over short-term sales gains. Incorrect approaches analysis. One incorrect approach involves subtly pressuring a customer to purchase an additional item by highlighting its supposed benefits in a way that exaggerates its value or necessity, even if not explicitly false. This can be interpreted as a deceptive sales tactic, violating ethical principles of honest representation and potentially TJX's customer service standards. It creates an environment where customers may feel coerced, leading to dissatisfaction and damage to the company's brand. Another incorrect approach is to suggest that customer needs a specific accessory to fully enjoy or utilize the primary item they are considering, implying the primary item is incomplete without it. This can be seen as creating a false sense of urgency or necessity, which is a form of misrepresentation. It exploits a customer's potential lack of product knowledge and can lead to them purchasing items they do not truly require, undermining trust and potentially violating consumer protection principles. A further incorrect approach involves implying that a limited-time offer on an add-on item is exclusive to that specific transaction and will not be available again, even if this is not strictly true or is a common sales tactic. This can be considered a form of undue pressure or a misleading statement designed to expedite a sale. It prioritizes immediate transaction completion over genuine customer need and can be viewed as manipulative, eroding customer confidence. Professional reasoning. Professionals should approach customer interactions with a focus on providing value and building relationships. This involves understanding the customer's needs, offering relevant solutions, and being transparent about product features and pricing. When faced with a situation that could be perceived as pressuring or misleading, the professional decision-making process should involve 1. Identifying the core customer need. 2. Assessing whether the proposed action genuinely addresses that need or creates an artificial one. 3. Considering the potential impact on customer trust and the company's reputation. 4. Adhering strictly to company policies and ethical guidelines regarding sales practices. If there is any doubt, erring on the side of transparency and customer benefit is always the most professional and compliant course of action. Question 10. Regulatory review indicates that an employee, while attempting to expedite a report generation process, inadvertently accessed a customer database containing personally identifiable information, PI, without explicit authorization. The employee realizes the access was not part of their defined job duties, and the data was not intended for their current task. What is the most appropriate immediate course of action for the employee? Option A. Delete the accessed customer data from their system to prevent any further unauthorized exposure. Option B. Immediately cease all access to the unauthorized data and report the incident to their direct supervisor in the company's compliance department. Option C. Ignore the unauthorized access and proceed with their original task, assuming the access was minor and unlikely to be detected. Option D. Continue accessing the data to complete the report, as the information is necessary for business operations, and the access was unintentional. Correct answer is B. Immediately cease all access to the unauthorized data and report the incident to their direct supervisor and the company's compliance department. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for efficient data processing with the imperative of adhering to data privacy regulations. The employee is aware of a potential shortcut that could expedite a task, but also carries a risk of unauthorized data access. The professional challenge lies in recognizing the potential regulatory breach and prioritizing compliance over expediency. Correct approach analysis. The correct approach involves immediately ceasing the unauthorized data access and reporting the incident to the appropriate internal channels, such as the compliance department or a designated supervisor. This aligns with best professional practice because it demonstrates a commitment to regulatory compliance and ethical conduct. Specifically, it adheres to principles of data protection and privacy, which are fundamental in many regulatory frameworks, including those governing retail operations. Prompt reporting allows the company to investigate, mitigate any potential harm, and implement corrective actions, thereby fulfilling its legal and ethical obligations. Incorrect approaches analysis. One incorrect approach involves continuing to access the data to complete the task, rationalizing that the information is needed for business operations. This is a significant regulatory and ethical failure, as it constitutes unauthorized access and potential misuse of sensitive information, violating data privacy laws and company policy. It prioritizes operational efficiency over legal and ethical responsibilities. Another incorrect approach is to ignore the unauthorized access and hope it goes unnoticed. This is a failure to act responsibly and ethically. It demonstrates a disregard for regulatory requirements and a lack of integrity, potentially exposing the company to severe penalties and reputational damage if discovered. A third incorrect approach is to delete the data without reporting it. While this might seem like an attempt to cover up the mistake, it is still a regulatory and ethical failure. It prevents a proper investigation into the breach, hinders the company's ability to implement necessary controls, and may even be seen as an attempt to obstruct an internal inquiry or regulatory audit. Professional reasoning. Professionals facing such situations should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves 1. Recognizing the potential for a violation. 2. Halting any activity that could lead to a breach. 3. Consulting relevant company policies and procedures. 4. Reporting the incident to the appropriate authority within the organization. 5. Cooperating fully with any subsequent investigation. This systematic approach ensures that decisions are made with a clear understanding of legal and ethical obligations. Question 11. Governance review demonstrates that a junior financial analyst has identified a potential misstatement in a significant account during routine data reconciliation. The analyst, based on their initial understanding, believes the amount is not material. What is the most appropriate immediate next step for the analyst? Option A. Discuss the potential misstatement with a trusted colleague in another department to gauge their opinion. Option B. Ignore the finding as the analyst has determined it is not material. Option C. Immediately attempt to correct the misstatement in the system without further consultation. Option D. Escalate the finding to the internal control or compliance function for further review and assessment. The correct answer is D. Escalate the finding to the internal control or compliance function for further review and assessment. Explanation. Scenario analysis. This scenario presents a challenge because the TJX companies, as a publicly traded entity, operates under significant regulatory scrutiny regarding its financial reporting and internal controls. The discovery of a potential misstatement, even if initially deemed immaterial by a junior analyst, requires a structured and compliant response. The challenge lies in balancing the need for prompt investigation with the risk of premature conclusions or actions that could violate reporting standards or internal policies. The pressure to resolve issues quickly must not override the imperative for thoroughness and adherence to established governance procedures. Correct approach analysis. The correct approach involves escalating the finding to the appropriate internal control or compliance function. This aligns with best professional practice and regulatory expectations, such as those outlined by the Securities and Exchange Commission, SEC, in the U.S., particularly concerning Sarbanes-Oxley Act SOX compliance. SOX mandates robust internal controls over financial reporting and requires companies to establish mechanisms for identifying, assessing, and remediating control deficiencies and potential misstatements. Escalation ensures that the issue is reviewed by individuals with the expertise and authority to conduct a proper assessment, determine materiality, and implement corrective actions in accordance with accounting principles, e.g., GAAP and company policy. This process safeguards against unauthorized decisions and ensures a consistent, documented, and compliant response. Incorrect approach is analysis. One incorrect approach would be to dismiss the finding outright due to the analyst's initial assessment of immateriality. This fails to acknowledge the potential for subjective judgment in materiality assessments and bypasses established internal control procedures. It represents a regulatory failure by potentially overlooking a material weakness or control deficiency that could lead to inaccurate financial reporting, violating SEC regulations and SOX requirements. Ethically, it demonstrates a lack of diligence and a disregard for the integrity of financial reporting. Another incorrect approach would be to immediately attempt to correct the misstatement without proper investigation or consultation. This could lead to an incorrect adjustment, potentially creating new errors or masking underlying control issues. It bypasses the necessary materiality assessment and could violate accounting standards if the correction is not justified or properly documented. This approach risks noncompliance with SEC reporting requirements and internal control frameworks. A third incorrect approach would be to discuss the potential misstatement with external parties, such as auditors or industry peers, before it has been formally assessed and addressed internally. This could violate confidentiality agreements, breach internal control protocols, and potentially lead to market-sensitive information being disclosed prematurely, creating regulatory risks related to insider trading or market manipulation. Professional reasoning. Professionals facing such a situation should follow a structured decision-making process. 1. Document the finding meticulously, including the nature of the potential misstatement and the initial assessment. 2. Immediately escalate the finding through the designated internal channels, such as the Compliance Department, Internal Audit, or the Finance Leadership. 3. Cooperate fully with the internal review process, providing all necessary information and context. 4. Await the outcome of the formal assessment, including the materiality determination and any required corrective actions. 5. Ensure all actions taken are in accordance with company policies, accounting standards, and relevant regulations. Question 12. The evaluation methodology shows that a new internal control has been implemented to mitigate the risk of unauthorized journal entries. To assess its effectiveness, the team primarily reviewed the control's documented procedures and accepted management's assurance that it is functioning as intended. Which of the following approaches would best demonstrate professional skepticism and provide a more robust evaluation of the control's operating effectiveness in accordance with U.S. regulatory expectations? Option A. Performing walkthroughs of the control process, inquiring with personnel involved in its execution, and testing a sample of the control's output to corroborate its effectiveness. Option B. Accepting the Internal Audit Department's prior year assessment of a similar control as indicative of the current control's effectiveness. Option C. Relying solely on the control's documented procedures and management's written confirmation of its operational status. Option D. Conducting a detailed review of the control's design documentation and comparing it against industry best practices without observing its application. The correct answer is A. Performing walkthroughs of the control process, inquiring with personnel involved in its execution, and testing a sample of the control's output to corroborate its effectiveness. Explanation. Scenario analysis. This scenario presents a professional challenge in evaluating the effectiveness of a new internal control designed to prevent financial misstatement. The challenge lies in determining whether the control is truly mitigating risk or merely creating a perception of compliance without substantive impact. The TJX companies operates within the United States, and therefore, all regulatory and ethical considerations must align with U.S. federal securities laws, specifically the Sarbanes-Oxley Act of 2002, SOX, and the rules and guidance issued by the Securities and Exchange Commission, SEC, and the Public Company Accounting Oversight Board, PKOB. A robust evaluation requires an understanding of the control's design, its implementation, and its operating effectiveness in practice, going beyond superficial checks. Correct approach analysis. The correct approach involves a multifaceted evaluation that includes both inquiry and observation of the control's execution, as well as testing of the control's output. This aligns with PKOB auditing standard No. 5, which emphasizes the importance of obtaining sufficient appropriate audit evidence regarding the effectiveness of internal control over financial reporting. By performing walkthroughs, the evaluator can trace transactions from initiation to completion, observing the control in action and understanding the process. Corroborating this observation with inquiries of personnel involved and testing the documentation or output generated by the control provides a comprehensive picture of its operating effectiveness. This approach directly addresses the risk of control override and ensures that the control is functioning as intended to prevent or detect material misstatements. It reflects best professional practice by seeking objective evidence of effectiveness, as mandated by SOX Section 404 and related SEC and PKOB guidance. Incorrect approaches analysis. Relying solely on management's assertion about the control's effectiveness represents a significant regulatory and ethical failure. SOX mandates independent assessment of internal controls, and accepting management's word without independent verification is a breach of that requirement. This approach is susceptible to management bias and could mask control deficiencies, leading to potential financial misstatements and violations of securities laws. Focusing only on the control's documentation without observing its actual execution or testing its output is another failure. While documentation is important, it only describes the intended control. The actual implementation and operating effectiveness may differ significantly. This superficial review fails to provide sufficient appropriate audit evidence and could lead to an inaccurate assessment of risk, violating the principles of SOX and PKOB standards. Evaluating the control's design in isolation, without considering its day-to-day operation, is also insufficient. A well-designed control can be poorly implemented or operated, rendering it ineffective. This approach neglects the critical aspect of operating effectiveness, which is essential for ensuring that controls are actually preventing or detecting errors and fraud. This oversight can lead to a false sense of security and a failure to identify material weaknesses, which is a direct contravention of SOX requirements. Professional reasoning. Professionals tasked with evaluating internal controls must adopt a skeptical mindset and seek corroborating evidence. The decision-making process should involve understanding the specific risks the control is designed to mitigate, assessing the adequacy of the control's design, and then rigorously testing its operating effectiveness. This involves a combination of inquiry, observation, inspection of documentation, and performance, as outlined in auditing standards. Professionals should always be prepared to challenge assumptions and seek objective evidence to support their conclusions, ensuring compliance with U.S. federal securities laws and professional ethical standards. Question 13. Implementation of new customer data privacy controls across a national retail chain, focusing on a phased rollout with pilot testing in select locations before full-scale deployment. Option A. Implement new customer data privacy controls across a national retail chain through a Big Bang approach, deploying all changes simultaneously to all locations. Option B. Implement new customer data privacy controls across a national retail chain by focusing solely on the technical aspects of the new systems, with minimal employee training. Option C. Implement new customer data privacy controls across a national retail chain, focusing on a phased rollout with pilot testing in select locations before full-scale deployment. Option D. Implement new customer data privacy controls across a national retail chain by prioritizing speed of deployment over thorough testing and employee familiarization. Correct answer is C. Implement new customer data privacy controls across a national retail chain, focusing on a phased rollout with pilot testing in select locations before full-scale deployment. Explanation: scenario analysis. Implementing new data privacy controls within a retail environment like TJX companies presents significant challenges. These include ensuring compliance with evolving regulations, integrating new systems with existing infrastructure, training a large and diverse workforce across multiple locations, and maintaining operational efficiency without disrupting customer experience or sales. The sheer volume of customer data handled, from loyalty programs to online transactions, necessitates robust and carefully considered implementation strategies. The challenge lies in balancing stringent data protection requirements with the practicalities of day-to-day retail operations. Correct approach analysis. The correct approach involves a phased rollout of new data privacy controls, beginning with a comprehensive risk assessment and pilot testing in a limited number of stores. This strategy allows for the identification and mitigation of potential issues before a full-scale deployment. It ensures that training materials are refined based on real-world feedback and that technical integrations are thoroughly validated. This methodical approach aligns with best practices for change management and regulatory compliance, minimizing the risk of widespread data breaches or operational disruptions. It demonstrates a commitment to due diligence and responsible data stewardship, which is crucial for maintaining customer trust and adhering to data protection laws. Incorrect approach is analysis. A Big Bang approach, where all new controls are implemented simultaneously across all stores, is professionally challenging and ethically questionable. This method significantly increases the risk of system failures, widespread employee confusion, and potential data breaches due to insufficient testing and training. It fails to demonstrate due diligence in safeguarding customer data and could lead to significant regulatory penalties and reputational damage. Implementing controls without adequate employee training or clear communication is also a failure. This creates an environment where employees may inadvertently violate privacy policies, leading to data mishandling. Such an approach neglects the human element of data protection, which is a critical component of regulatory compliance and ethical responsibility. It suggests a lack of understanding of the practical application of privacy measures and a disregard for the potential consequences of employee error. Focusing solely on technical implementation without considering the impact on customer experience or operational workflows is another flawed strategy. While technical compliance is important, it must be integrated seamlessly into business processes. Ignoring the user experience can lead to workarounds that undermine the very controls being implemented, creating new vulnerabilities and failing to achieve the intended privacy objectives. This approach demonstrates a narrow, siloed perspective that is detrimental to effective and sustainable data protection. Professional reasoning. Professionals tasked with implementing data privacy controls should adopt a structured, risk-based approach. This involves thorough planning, stakeholder engagement, pilot testing, comprehensive training, and continuous monitoring. The decision-making process should prioritize minimizing risk to customer data and the organization, ensuring regulatory adherence, and maintaining operational integrity. A proactive and iterative methodology is essential for navigating the complexities of data privacy implementation in a dynamic retail environment. Question 14. The assessment process reveals that candidate is asked to provide details about recent marketing campaign strategies and their projected impact on sales figures for a specific product line. The candidate is unsure if this information is considered proprietary and how broadly it can be shared within the context of the assessment. Option A. The candidate should refuse to provide any information regarding marketing campaigns and sales projections, citing concerns about proprietary data. Option B. The candidate should consult their direct manager or the designated TJX compliance officer to clarify the sensitivity of the information and the appropriate protocol for sharing it within the assessment framework. Option C. The candidate should immediately provide all requested details about the marketing campaigns and sales projections to facilitate a thorough assessment. Option D. The candidate should share the marketing campaign details and sales projections with a trusted colleague in another department who might have insights into data sharing policies. The correct answer is B. The candidate should consult their direct manager or the designated TJX compliance officer to clarify the sensitivity of the information and the appropriate protocol for sharing it within the assessment framework. Explanation. The assessment process reveals a scenario where an employee is asked to provide information that could be considered sensitive, potentially impacting the company's competitive standing or internal operations. This presents a professional challenge because it requires the employee to balance their duty to assist with the assessment process against their obligation to protect confidential company information and adhere to internal policies and relevant regulations. Careful judgment is required to determine the appropriate level of disclosure. The correct approach represents best professional practice because it prioritizes adherence to TJX's established policies and legal obligations regarding data privacy and confidentiality. By seeking clarification from their manager and referencing the company's code of conduct and data handling guidelines, the employee demonstrates a commitment to ethical conduct and regulatory compliance. This proactive step ensures that any information shared is done so appropriately, with the necessary authorization, and in a manner that safeguards sensitive data, thereby preventing potential legal repercussions and reputational damage for TJX. An incorrect approach that involves immediately providing all requested information without verification or consideration of its sensitivity is professionally unacceptable. This failure constitutes a breach of confidentiality and could violate data protection regulations, such as those pertaining to customer information or proprietary business strategies. It demonstrates a lack of understanding of the importance of information security and a disregard for company policy, potentially exposing TJX to significant legal penalties and competitive disadvantages. Another incorrect approach, which is to refuse to provide any information whatsoever, even if it is non-sensitive and necessary for the assessment, is also professionally unacceptable. It might seem like a safe option to avoid disclosure. It can hinder legitimate business processes and assessment activities. This can be seen as uncooperative and may violate expectations of employee participation in company initiatives, potentially leading to internal disciplinary action. It fails to recognize the distinction between sensitive and non-sensitive information and the need for a balanced approach. A third incorrect approach, which is to share the information with colleagues outside of the direct assessment team without proper authorization, is a serious ethical and regulatory failure. This constitutes an unauthorized disclosure of potentially sensitive information, violating data privacy principles and internal control mechanisms. It increases the risk of data breaches, misuse of information, and competitive espionage, exposing TJX to severe legal and financial consequences. The professional reasoning process for similar situations should involve a clear understanding of company policies, including data privacy, confidentiality, and code of conduct. When faced with a request for information, an employee should first assess the nature of the information requested. If there is any doubt about its sensitivity or the appropriateness of disclosure, the employee should consult their direct manager or the designated compliance officer. This consultation should focus on understanding the purpose of the request, the specific information needed, and the authorized channels for sharing. This systematic approach ensures that all actions are aligned with legal requirements and ethical standards, protecting both the individual and the organization. Question 15. Operational review demonstrates that TJX Company's customer loyalty program collects purchase history and demographic information. The marketing department proposes to use this data to send personalized promotional offers via email and SMS, and to tailor in-store advertising displays based on aggregated customer preferences. The current loyalty program terms and conditions mention data collection for program improvement and personalized offers, but do not explicitly detail the use of SMS for marketing or the specific methods for in-store advertising tailoring. What is the most appropriate course of action to ensure compliance with data privacy principles and maintain customer trust? Option A. Collect all available demographic and purchase history data and use it for broad marketing campaigns, relying on the existing privacy policy to cover any data usage. Option B. Proceed with sending personalized promotional offers via email and SMS and tailoring in-store advertising, as the loyalty program terms and conditions broadly cover data usage for personalized offers and program improvement. Option C. Segment customers based on purchase history and send targeted email offers, but refrain from using SMS marketing or in-store advertising tailoring due to potential privacy concerns. Option D. Update the loyalty program's terms and conditions to clearly and explicitly state the intended uses of collected data, including email and SMS marketing, and in-store advertising tailoring, and obtain affirmative consent from existing and new members before proceeding with these specific marketing activities. Correct answer is D. Update the loyalty program's terms and conditions to clearly and explicitly state the intended uses of collected data, including email and SMS marketing, and in-store advertising tailoring, and obtain affirmative consent from existing and new members before proceeding with these specific marketing activities. Explanation. Scenario analysis. This scenario presents a professional challenge related to data privacy and customer trust, particularly within the retail sector where TJX Companies operates. The core issue is balancing the desire to leverage customer data for business insights and personalized marketing with the legal and ethical obligations to protect that data. The challenge lies in interpreting and applying the relevant data privacy regulations to a specific business practice, ensuring compliance without stifling innovation or customer engagement. Careful judgment is required to determine the appropriate level of consent and transparency. Correct approach analysis. The correct approach emphasizes obtaining explicit, informed consent from customers before collecting and using their personal data for marketing purposes. This aligns with the principles of data privacy regulations, such as the California Consumer Privacy Act, CCPA, or similar frameworks that may be relevant to TJX's operations. Best professional practice dictates transparency about data collection, purpose, and usage, and providing customers with clear choices and control over their information. This approach builds trust, mitigates legal risk, and fosters a positive customer relationship. Incorrect approaches analysis. One incorrect approach involves assuming implied consent based on a customer's continued use of a loyalty program. This fails to meet the standard of explicit consent required by many data privacy laws. It represents a regulatory failure by not adhering to the affirmative opt-in requirements and an ethical failure by potentially misleading customers about how their data is being used. Another incorrect approach is to collect data broadly without clearly defining its purpose, and then using it for various marketing initiatives without further customer notification or consent. This is a significant regulatory failure, as it violates principles of data minimization and purpose limitation. Ethically, it erodes customer trust by being opaque and potentially intrusive. A third incorrect approach is to rely on vague privacy policy statements that are not easily accessible or understandable to the average customer. While a privacy policy is necessary, it does not substitute for obtaining specific consent for distinct data processing activities, especially those involving marketing. This is a regulatory failure because it does not ensure customers are truly informed, and an ethical failure because it exploits a lack of customer awareness. Professional reasoning. Professionals should adopt a proactive and customer-centric approach to data privacy. This involves understanding the specific data privacy laws applicable to their operations, conducting regular data privacy impact assessments, and implementing clear, transparent consent mechanisms. When in doubt, err on the side of greater transparency and stronger consent. Regularly training staff on data privacy, best practices, and legal requirements is also crucial. The decision-making process should prioritize customer rights and regulatory compliance, viewing data privacy not as a burden, but as a cornerstone of building a sustainable and trustworthy business. Question 16. Process analysis reveals a discrepancy where a product is scanned at the register at a higher price than what was displayed on the shelf tag. The associate is aware of the shelf tag price and the system price. What is the most appropriate immediate action to take from a stakeholder perspective, considering TJX Company's commitment to customer satisfaction and regulatory compliance? Option A. Blame the customer for not noticing the discrepancy earlier and suggest they check prices more carefully in the future. Option B. Honor the lower shelf tag price for the customer and initiate an immediate internal review to correct the system and shelf tag pricing. Option C. Insist on charging the higher system price and inform the customer that the shelf tag may be outdated. Option D. Refuse to sell the item until the pricing discrepancy can be fully investigated and resolved by management. The correct answer is B. Honor the lower shelf tag price for the customer and initiate an immediate internal review to correct the system and shelf tag pricing. Explanation. This scenario presents a common challenge in retail operations. balancing the need for efficient inventory management with the ethical and regulatory obligations to customers regarding product availability and pricing. The core of the challenge lies in the potential for miscommunication or error in the system that leads to a discrepancy between advertised or expected prices and the actual price at the point of sale. This can erode customer trust and lead to regulatory scrutiny. The correct approach, which involves immediately honoring the lower advertised price and escalating the issue internally for correction, represents best professional practice. This aligns with consumer protection laws that often stipulate that advertised prices are binding, or that the lower of the two prices should be honored. Ethically, it demonstrates a commitment to customer fairness and transparency, even when it results in a short-term financial loss. This proactive approach minimizes customer dissatisfaction and potential complaints to regulatory bodies. An incorrect approach that involves refusing to honor the advertised price and insisting on the higher system price is professionally unacceptable. This directly violates consumer protection principles and can lead to accusations of deceptive trade practices. It prioritizes immediate profit over customer trust and legal compliance. Another incorrect approach, which involves blaming the customer for not noticing the discrepancy, is also ethically flawed and unprofessional. It shifts responsibility away from the company's internal processes and creates a confrontational situation. Finally, an approach that involves a lengthy investigation before offering a resolution, without an immediate commitment to the customer, can be perceived as a tactic to avoid honoring the advertised price, further damaging customer relations and potentially inviting regulatory intervention. Professionals should employ a decision-making framework that prioritizes customer satisfaction and regulatory compliance. This involves 1. Acknowledging the customer's perspective and the discrepancy. 2. Immediately taking action to resolve the immediate transaction in the customer's favor, if feasible and aligned with consumer protection principles. 3. Initiating a prompt internal investigation to identify and rectify the root cause of the error. 4. Communicating transparently with the customer about the resolution and any corrective actions taken. Question 17. Investigation of a supervisor's request to bypass standard customer data verification procedures for a large, time-sensitive transaction, citing the need to expedite service for a high-profile client, raises concerns about potential regulatory noncompliance. The employee is aware that these procedures are in place to prevent fraud and comply with financial transaction regulations. What is the most appropriate course of action for the employee? Option A. Immediately fulfill the supervisor's request to expedite the transaction, prioritizing client satisfaction and operational efficiency over strict adherence to verification procedures. Option B. Politely decline the request, citing company policy and the importance of adhering to data verification protocols to ensure regulatory compliance and prevent potential fraud. Option C. Proceed with the transaction as requested by the supervisor, but make a note in the system that the standard verification was bypassed due to the supervisor's directive. Option D. Inform the supervisor that the request cannot be fulfilled, and then proceed to process the transaction using the standard verification procedures without further communication. The correct answer is B. Politely decline the request, citing company policy and the importance of adhering to data verification protocols to ensure regulatory compliance and prevent potential fraud. Explanation. This scenario presents a professional challenge because it requires an employee to navigate a potential conflict between a direct request from a supervisor and established company policy designed to prevent regulatory noncompliance and protect the company's reputation. The employee must exercise sound judgment to uphold ethical standards and legal requirements without jeopardizing their professional standing or the company's integrity. The correct approach represents best professional practice because it prioritizes adherence to the TJX company's regulatory compliance framework and internal policies. By seeking clarification from the compliance department, the employee demonstrates a commitment to understanding and following established procedures, which is crucial for preventing potential violations of consumer protection laws or data privacy regulations. This proactive step ensures that any actions taken are in line with legal obligations and company guidelines, thereby mitigating risk. An incorrect approach that involves directly fulfilling the supervisor's request without verification would represent a significant ethical and regulatory failure. This could lead to violations of consumer privacy laws, e.g., If personal customer information is improperly disclosed, or deceptive trade practices, exposing TJX companies to legal penalties, fines, and reputational damage. Another incorrect approach, such as ignoring the request and taking no action, is also professionally unacceptable. This inaction could be interpreted as a failure to address a potential compliance issue, which could still lead to negative consequences if the underlying activity is indeed non-compliant. Furthermore, it demonstrates a lack of initiative and a failure to engage with a potential problem, which is contrary to fostering a culture of compliance. Professionals should employ a decision-making framework that begins with identifying potential conflicts between directives and established policies. The next step involves seeking clarification from the appropriate internal department, such as compliance or legal, to understand the regulatory implications and company expectations. This ensures that decisions are informed by expert guidance and align with the organization's commitment to ethical conduct and legal adherence. Documenting the interaction and the subsequent decision-making process is also a critical component of professional practice, providing a record of due diligence. Question 18. When evaluating a customer's request for a return that appears to fall outside the standard return policy guidelines, and a new associate is unsure of the exact procedure or potential exceptions, what is the most appropriate course of action to ensure adherence to TJX company's policies and maintain good customer relations? Option A. Make an educated guess about the policy and proceed with the return based on that assumption. Option B. Accept the return without question to avoid customer dissatisfaction, regardless of policy. Option C. Consult with a supervisor or manager to clarify the policy and determine the appropriate action. Option D. Refuse the return immediately, citing the perceived violation of the return policy. Correct answer is C. Consult with a supervisor or manager to clarify the policy and determine the appropriate action. Explanation. Scenario analysis. This scenario presents a common challenge in retail environments where a new associate is tasked with understanding and applying company policies regarding customer returns. The challenge lies in the associate's limited experience and potential for misinterpreting policy nuances, which could lead to either an overly lenient or overly strict application of the rules. This requires careful judgment to balance customer satisfaction with adherence to company guidelines and loss prevention. Correct approach analysis. The correct approach involves the associate seeking clarification from a supervisor or manager. This represents best professional practice because it acknowledges the associate's learning curve and prioritizes accurate policy application. It aligns with ethical principles of honesty and diligence, ensuring that decisions are made based on a complete understanding of TJX's established return policy. This proactive step prevents potential policy violations, protects the company from undue losses, and fosters a culture of accountability and continuous learning. It also demonstrates respect for established procedures and the authority of management. Incorrect approach is analysis. One incorrect approach is to simply refuse the return based on a vague recollection of the policy. This is professionally unacceptable as it demonstrates a lack of diligence and potentially a failure to uphold customer service standards. It could lead to customer dissatisfaction and damage the company's reputation. Ethically, it shows a disregard for the possibility of exceptions or specific circumstances that might warrant a return, even if slightly outside the general rule. Another incorrect approach is to accept the return without verifying the policy, especially if it seems to fall outside the typical guidelines. This is professionally unacceptable because it risks violating company policy, potentially leading to financial losses for TJX. It demonstrates a lack of attention to detail and a failure to uphold the responsibilities of the role. Ethically, it could be seen as enabling policy circumvention and not acting in the best interest of the employer. A third incorrect approach is to guess at the policy and make a decision without any confirmation. This is professionally unacceptable as it introduces a high degree of error and inconsistency in policy application. It shows a lack of commitment to accuracy and a failure to take the role seriously. Ethically, it represents a dereliction of duty by not ensuring that decisions are based on sound knowledge and established procedures. Professional reasoning. Professionals should approach situations where policy application is unclear by first consulting the official policy documentation. If the documentation is ambiguous or the situation is complex, the next step is to seek guidance from a supervisor or manager. This iterative process of self-reliance, followed by seeking expert advice, ensures that decisions are informed, compliant, and aligned with organizational objectives. It promotes a culture of learning and reinforces the importance of accurate policy adherence. Question 19. Operational review demonstrates that a stock associate, while processing a return, notices a slight discrepancy between the item's scanned barcode and the product description on the system. The associate is under pressure to clear the backlog of returns before the end of their shift. What is the most appropriate course of action? Option A. Process the return as is, hoping the discrepancy is minor and won't impact inventory accuracy significantly. Option B. Ignore the discrepancy and move on to the next return to maintain processing speed. Option C. Assume the barcode is correct and override the system description to match the scanned item. Option D. Document the discrepancy and seek guidance from a supervisor before proceeding with the return processing. The correct answer is D. Document the discrepancy and seek guidance from a supervisor before proceeding with the return processing. Explanation. Scenario analysis. This scenario presents a challenge in balancing operational efficiency with adherence to TJX's internal policies and potentially broader retail compliance standards. The pressure to expedite a process, even with a minor deviation, requires careful consideration of the potential downstream impacts and the integrity of the data being handled. The core challenge lies in recognizing that even seemingly small procedural shortcuts can have significant implications for accuracy, auditability, and ultimately, customer trust or internal control. Correct approach analysis. The correct approach involves a commitment to upholding established procedures and seeking clarification or approval for any deviation, even if it appears minor. This aligns with best practices in operational integrity and regulatory compliance. By documenting the issue and escalating it through the appropriate channels, the associate demonstrates a commitment to accuracy and accountability. This proactive communication ensures that any decision to deviate is made with full awareness of potential risks and is properly authorized, thereby safeguarding against errors and maintaining the reliability of inventory data. This upholds the principle of doing things right the first time and reinforces a culture of compliance. Incorrect approach is analysis. One incorrect approach involves proceeding with the task without addressing the discrepancy. This is a failure to adhere to established operational procedures, which are designed to ensure accuracy and prevent errors. Ethically, it represents a disregard for the importance of precise record keeping, which can lead to misinformed business decisions. From a compliance perspective, it could violate internal controls designed to maintain accurate inventory levels, potentially impacting financial reporting or operational planning. Another incorrect approach is to make an assumption about the correct process and proceed without verification. This demonstrates a lack of diligence and a failure to follow established protocols. It introduces a risk of propagating errors and undermines the reliability of the data. This approach can lead to inaccurate inventory counts, which can have financial implications and affect customer satisfaction if products are shown as available when they are not. A third incorrect approach is to ignore the discrepancy and hope it resolves itself, or is minor enough not to matter. This is a passive and irresponsible stance that fails to address a potential operational issue. It neglects the duty of care in maintaining accurate business records and can lead to more significant problems down the line, such as stock discrepancies that are harder to trace and correct. It also signals a lack of engagement with the operational processes. Professional reasoning. Professionals in a retail environment like TJX must cultivate a mindset of diligence and accountability. When faced with an operational anomaly, the decision-making process should involve 1. Identifying the deviation from the standard procedure. 2. Assessing the potential impact of the deviation on accuracy, efficiency, and compliance. 3. Consulting relevant policy documents or seeking guidance from a supervisor or designated point of contact. 4. Documenting the issue and the chosen course of action. 5. Ensuring any authorized deviation is properly recorded. This structured approach ensures that decisions are informed, defensible, and aligned with the company's commitment to operational excellence and ethical conduct. Question 20. The evaluation methodology shows that a junior associate, while working on a project involving customer feedback analysis, inadvertently discovers a folder on a shared drive containing what appears to be sensitive personal information of several TJX employees, including performance reviews and contact details. The associate suspects this information might be relevant to an ongoing internal investigation into potential policy violations, but is not directly involved in that investigation and lacks explicit authorization to access employee personnel files. The associate is unsure of the appropriate next steps. Option A. Report the discovery of the folder and its apparent contents to their direct supervisor and the IT department, requesting guidance on how to proceed in ensuring no unauthorized access occurs. Option B. Immediately access the folder to review the contents, document any findings that seem relevant to the internal investigation, and then report the discovery to their direct supervisor. Option C. Ignore the folder, assuming it is not relevant to their current project and that any necessary access will be handled by the appropriate personnel. Option D. Download the entire folder to their personal computer to review it thoroughly off-network, ensuring no one else can access it while they are investigating its relevance. The correct answer is B. Immediately access the folder to review the contents, document any findings that seem relevant to the internal investigation, and then report the discovery to their direct supervisor. Explanation. This scenario presents a professional challenge because it requires an individual to balance the immediate need for information with the ethical and regulatory obligations to protect sensitive company data. The TJX companies operates within a framework of data privacy and security regulations, which are paramount in maintaining customer trust and avoiding legal repercussions. The core of the challenge lies in discerning when and how to access information that might be relevant to an ongoing investigation without overstepping boundaries or violating established protocols. The correct approach represents best professional practice because it prioritizes adherence to TJX's internal policies and relevant U.S. data privacy laws, such as the California Consumer Privacy Act, CCPA, if applicable to the data in question, or general principles of data security and employee conduct. This approach involves seeking authorized access through established channels, such as IT or legal departments, and ensuring that any access is logged and documented. This demonstrates a commitment to due diligence, transparency, and compliance, which are foundational to ethical business operations and risk management. An incorrect approach that involves directly accessing employee personal files without explicit authorization or a documented, legitimate business need would constitute a significant regulatory and ethical failure. This could violate employee privacy rights, breach confidentiality agreements, and contravene data protection laws. Such actions could lead to severe penalties, including fines, legal action, and reputational damage for TJX. Another incorrect approach, such as ignoring the potential issue due to a lack of direct involvement, would be a failure of professional responsibility and could allow a potential problem to escalate, leading to broader compliance issues or security vulnerabilities. Professionals should employ a decision-making framework that begins with identifying the nature of the information and the potential risks associated with its access or misuse. This framework involves consulting company policies, seeking guidance from supervisors or relevant departments, e.g., legal, HR, IT security, and documenting all actions taken. The principle of least privilege should guide access decisions, meaning individuals should only have access to the information necessary to perform their job functions. When in doubt, seeking clarification and adhering to established procedures is always the most prudent course of action.